Hi, welcome back. If you're looking to buy a house in 2021, whether buying a ranch home or any other type of house, unless you're paying all cash, you will need a mortgage lender. Question is, should you shop for a mortgage before you shop for a new home or after? Where do you find a mortgage lender? What's involved in getting approved for a mortgage? Well, you're in luck. That's today's topic on HeyBobStL.com, and we're starting right now. Hi, I'm Bob Weibrecht, a Missouri licensed realtor with Coldwell Banker Realty Gundaker in St. Louis, Missouri. If you're interested in all things residential real estate in St. Louis or beyond, please subscribe and click that bell icon for insights and tips into the residential real estate market. I publish a new video every Wednesday, and you don't want to miss a thing. Let's get to the reason why you stopped by today, and that's how to find a great mortgage lender. Currently, it is a real estate frenzy in the St. Louis real estate market, and probably in your area too. Properly priced homes are selling within days, if not hours, of hitting the market, sometimes with multiple offers way over the asking price. The last thing you want to do is make an uninformed first-time homebuyer mistake of not getting pre-approved by your preferred lender before viewing homes. You will simply lose out to one that is pre-approved. That's not what you want, is it? When shopping for a mortgage or a home loan, consult with a great mortgage lender. But how do you find a great mortgage lender? That can be extremely easy. Ask your coworkers, your friends, your family, or somebody who has recently used a mortgage lender and has had a great experience with them. Or better yet, ask your buyer's agent. They're probably one of the best sources to get a referral from. Why is that, you may ask? Your agent probably has had experience with mortgage lenders from previous transactions and can make recommendations from that. They have had experience with the good, the bad, and the ugly in the home loan business. Typically, the recommended lenders are the most important partnership in your agent's business. The lender you choose should be experienced in the home lending process, since buying a home is usually the largest financial transaction in your life. But just what is a mortgage lender? A mortgage lender is a financial institution or mortgage bank that offers and underwrites home loans. They set the terms, the interest rate, the repayment schedule, and other key aspects of the mortgage. The property that's to be purchased is what is used to secure the loan. When shopping for a mortgage lender, you should compare them. There are many types of mortgage lenders, such as some real estate offices have in-house lenders available to work with buyers. Are you required to use this in-house lender? In a word, no. What about credit unions? Credit unions are member-owned financial institutions and typically offer a favorable interest rate to its members. Mortgage bankers. They work for a specific financial institution and package loans for underwriters. Go to your local bank. Check with their lender. This is just to mention a few different types of mortgage lenders. Once you have found a few mortgage lenders to work with, you will need to apply for a home loan. Before you do that, you should ask the mortgage lender some questions, such as, how often do you communicate with clients? How quickly do you respond to the messages left by clients? How long will it take to get a pre-approval, appraisal, and close on the home? What lender fees will I, as the buyer, be responsible for at closing? These may include commission, loan origination fees, points, appraisal, credit report, and application fees. Ask them if they will eliminate any of these fees or roll them into your mortgages. Ask, what are your down payment requirements? Ask if you can buy points to lower your interest rate. Ask, do you have any programs for first-time home buyers? Do you offer any renovation loans? This would be great in case you find a home needing repairs. Be sure to ask questions and read the fine print. Like your buyer's agent and the home buying process, your mortgage lender should be willing to take you through the loan process and give you great service. They will go over all loan product options with you and tell you which loan they think is going to be best for you. They should provide you with a detailed breakdown of fees to help you clarify how much your new monthly payment will be and an estimate of how much the loan closing costs will be. Some of these fees and amounts will vary depending on timing and other factors. Full transparency on your home loan is what you want. The information they provide should give you the total estimated cash the mortgage lender is going to require for you to close on your loan, your loan interest rate and terms, and if mortgage insurance will be required. Usually, your mortgage payment will consist of several parts, which may include principal and interest. This is the monthly payment for the amount financed. Homeowners insurance. This is 1/12 of your annual homeowners insurance policy. Real estate taxes. This is 1/12 of your annual local real estate property tax. Private mortgage insurance, or PMI. This depends on your loan product. Frequently, it's applied if the borrower has less than 20% of equity in the home. If you're buying a condo or a home with a homeowners association, the lender may collect this money and escrow it for you to pay when it is due. Depending on your loan and area, you may have other considerations to include on your own loan. Check with your lender for specifics. It is to your advantage to compare rates from at least 2 mortgage lenders. Your chosen mortgage lenders will pull credit information and process a loan application to provide you a more accurate loan cost and interest rates. When talking with a mortgage lender, get the details of the loan in writing. They may have different loan products to consider. Loan products such as conventional financing, FHA, VA, USDA, and ARMS, just to mention a few. When a loan product is recommended, ask why they think that's the best for you. Now you're probably thinking to yourself, really? You want me to apply for multiple loans? You're probably thinking multiple inquiries will hurt my credit score. Typically, all mortgage applications made within 30 days after their first inquiry are treated as a single inquiry. That's the good news, because it will help you find the best lender for your needs. So now you know the second step in buying a home, finding a great mortgage lender. But do you know about the third step, and that is how to shop for a home? That's what we're going to discuss next time on how to buy a home with HeyBobStL.com.